This is a weekly breakdown of price action and outlook for the next week. I've not been doing these recordings for the last 10 days or so. I've had COVID, so I've been recovering and just getting back into the swing of things now. So I'm going to carry on with these daily price action journals, and because they have been beneficial and they've definitely helped, so I'm going to keep doing that. Puts a bit of pressure on myself to spend like quite a bit of time on the charts without any distractions and talking through my thoughts and stuff, and it definitely benefits me, so no reason to stop doing it. So first, obviously now we've started a new month as well as starting a new quarter, so we're into the third quarter now. This year is going fast, but typically as we do start a new quarter and a new month, we do have profit taking going on in the market by investors, and we do tend to have slower price action as well, as we do start to form these wicks for the quarterly and monthly candles. As you can see on gold, we've had the 3-month candle close quite a weak bullish candle with a strong rejection from the monthly resistance near the all-time highs of gold. So we had a weak bullish candle close in comparison to this strong bearish momentum on this monthly candle during 3-month candle during January. And now we're starting to get this top wick formed on gold. I am bearish at the minute on gold. I've got a bearish short-term bias on gold, and now we're going into the monthly, we can see May's strong bullish price action was completely engulfed by the optimism in the dollar and the potential interest rate hikes, talks, and tapering off stimulus. And now, as we started July, we were getting this top wick, and partly to this top wick was formed because of FOMC, FOMC talks, and all the data that came out, which kind of contradicted some of the stimulus, the tapering off of stimulus, and the interest rate hikes talks, because basically the current results in the US economy with poor job data and poor manufacturing data and things like that kind of meant, because of that poor data, that the US economy isn't ready at the minute to continue to start its tapering off process and start increasing interest rates. The US economy, the latest data release is coming out, sort of paints the picture that the US economy isn't ready to do that yet. So this gave gold a bit of an upside move for the start of the month. Was expected really, but we do get a bit of upside and a bit of liquidity grab before we do get that push down throughout the month of July and also the quarter. In terms of targets on a monthly basis, I do see us potentially going down and testing these lows of 1705. I'm just gonna mark that up now. Monthly July target. Let's mark that out for future reference. Yeah, after this strong engulfing candle, a rejection of this monthly resistance point, I do expect gold to give us this push down and to go and test 1705 level, monthly support. So now, in terms of trade ideas, we have gone and tested this daily resistance I marked out before. We've tested it numerous times now. We've had that NFP In fact, was it NFP news? NFP, weren't it? The other day. I've not been very active in the charts, been recovering, but I think it was NFP the news. One second. So yeah, I'm just going to go and have a quick gander over the news now. Yeah, manufacturing data. Unemployment claims. Yeah, there we go. Non-farm payrolls. Yeah, so unemployment rate worse than expected. Quite mixed results in general, but in terms of what we were talking about fundamentally, you would want to see a rise in employment before you'd start tapering off some of this support for US citizens. So these results contradicted slightly this price move here and the talks of tapering off stimulus and interest and increasing interest rates. So did give us that slight push up, but now again we are at this daily resistance. It'd be nice to see some intraday resistance formed there. Values to trade above this level there at 1792 and failure to trade above it on intraday candles and then see some resistance formed there. That would be good to take some sell players down, riding it down to these lows there, and then once we do break these lows of 1752 and also start trading below these previous support and resistance points, then we can continue this downside move on gold and start trading towards these lows here. So yeah, with the break of this bullish market structure, corrective phase market structure we've had, the break of it, a strong bearish momentum, I've got a sell side bias on gold, but I am aware that we are start of a new quarter and a new month, so there could be further upside, maybe up to these levels here, 1813. Could be further upside and a deeper pullback for then eventually a better demanded price to sell from. So, in terms of potential trades which could have been taken, nice rejections at these key levels here. Several rejections at 1774. 1772, 500 I think it is actually, yeah. Several rejections here, it's nice to see. Fails to close above it, pullbacks, wick rejections, perfect wick rejection there last week. But as you can see, quite a slow movement on gold at the minute. as we was getting towards the end of the month, end of the quarter, we had quite indecisive price action on gold, ranging markets after this initial push down during Fed Powell speaking at this initial downside, and then exhaustion at these lows and liquidity being formed. But yeah, we are at now top of the range. So it'll be interesting to see if we can't trade above these with this range and then potentially push down. Quite indecisive price action, but a decent rejection on this key level there, but quite indecisive, isn't it? I like how we failed to trade below this level there at 1775, 1772,500. I like how we failed to stay below it and close above it, and then we retrace throughout the American session and Asian. But again, it takes a lot of time to get in between these key levels. It's a nice double bottom. Let's have a look at this piece of price action here. Right, so this is the 1 minute. That's what the price action I've just marked up on the hourly, and then we've gone into the 1 minute to look for potential entry points. This was not a trading time for me, but it's good to just analyse the price action anyway around levels of interest for me. So yeah, this is nice to see. We have a double bottom scenario here. Double bottom, failure to trade below this key level for the time being, break above, retest, and then it comes back for a second test of this key level, and then we get another double bottom scenario here. You can either enter around here in this first tap, the second tap, or you could have entered here or here. That would have been the best entry with no drawdown, but all well and good saying in hindsight. And then in terms of managing the trade, well, first of all, you'd have stops below this level here, below these rejections here, and you'd have your trade either here, here, or here. You'd have entry points. Once you trade above the key level and then test it and form support above it, that's where the optimal entry points would be. You'd have your stops. So say you said trade it there. Stops below the low, and then TP at the next key level. So basically, I'd probably would have got out there though. Let's be on the safe side. Or close majority of positions. In terms of managing the trade, so you have this lower high here, and then you're getting a higher low we formed here. Once price trades above this level, breaks it, and then it gets a little, you would set your stops at break even. So from this point here, once you trade above this high here, set stops at break even, and then you get the pullback and you test this area of support here quite perfectly. Candle body closures aligning right on this level there, which is interesting to see. Just another patterns of price action and market structure to look out for. I like how it's respected it perfectly on the dot. The candle body closures forms support, and then finally breaks above this high here. And once we get another higher high being formed in lower time frames, we get that strong bullish move to the upside. We form resistance above this lower high here, sensitive price point. Look how we form support just above it multiple times. It's interesting to see. And then eventually get our push above this key level. So yeah, that would be a nice buy play, good price action. But that was during the Aizen session and not during my trading hours. But it's always good to just review price action, get an idea of why trades worked out. In terms of other moves on gold, I like how this 15-minute candle closes above. In fact, that's got to be thingy. That's got to be the news. That's just, no, you don't want to trade that, to be honest. It's quite decisive. You'd imagine people would have took sell stops and buy stops. We had sell stops and buy stops during this news event as well, which you would have had your ass kicked really, unless you managed your trade quite well. Sell stops would have been activated, and then you would get a spike to the downside, and then that quick push back up, and buy stops would have been activated eventually. So if you had stops on either side of the market, then one of them would have lost. In terms of entry points, perfect rejection there. Let's have a look at that. Yeah, that's quite tough really. That's quite tough because this is a strong bearish engulfing candle on this bullish one after this bullish candle here, so it's not giving the best price action confirms at this key level to take an entry. I guess this bullish candle engulfs this bearish one, so you could be inclined to take an entry from there, but maybe, well, definitely for me, better confirmed and cleaner price action around this key level would have been a more structured double bottom at this key level. Maybe some slowdown in bearish candles, smaller bearish candles being printed and signs of exhaustion, and then a double bottom scenario similar to the one we just marked out during that Asian session, with nice higher lows being formed around the key level and failures to continue the push down and break lower lows and higher lows being formed. That would have been a cleaner entry point. And yeah, this eventually does get to the key level, but quite quickly really. I like how it's retested. Recent price action as well. Candle body closures. Failures to close above these highs. Gives that second push to the upside. Free to on trade there, potentially. But like I said, the price action confirms wasn't the cleanest around that level. Another decent reaction during an Asian session. Break and retest. stronger bullish engulfing candle at the key level, bullish price action being formed, and then extending the trade or keeping them, this trade idea being valid. Once you close above this high, which you do, you get a nice strong bullish engulfing candle and break of this high, and you could then set your stops at break even and just let it run. And again, nice reactions to market structure, quite slow, and then you start if you would have set stops at break even, it would have eventually give you that push up, a stronger push up, quite slow price action in between it, but it would have worked out. That's a nice reaction. Let's have a look at that. Test it out. Right, so here we are at we're about 3 o'clock, it's 3 o'clock GMT, and we've reached the daily resistance zone and the top of the order block range, whatever you want to call it, on the higher time frame, and we start to see weakened bullish momentum around this level, just above it. We have a breakdown and then a double top scenario, and then we get closures below this high, which is the first indication of the bullish momentum going, and then we break back down, stronger bearish candles, and we start to range and consolidate right at the key level here on the 1 minute, which is good, interesting to see. We get a stronger bearish candle here. We've broke down, retested the key level underneath it on the lower time frames. We've had a double top scenario, failures to trade to print a significant high above this high here, and then we get nice strong bearish candles here just below these minor supports, and then you get that continued push down. Like you notice, as we get this strong bearish candle here, that signifies that signals the rest of the move down. Price never reverts to this. The price never tests this candle once it's broken it. It just pushes down eventually, stronger to the downside. Look at that perfect reaction to the key level. It's good to see. Shit, cheat code shit, look at that. He's got a nice little push, counter trend opportunity if you wanted to take it. Quite a high risk, high reward, but you get that tiny bearish candle, engulfing bullish candle. You could get a tight little squeezer out of there. So let's get a quick 25 pips, you know, can't compare. Oh, strong spike down. So look at that. Retest of the key level. Exhaustion candle. Strong push down. Beautiful. You get the bearish price action start to exhaust when it prints that higher low, and then it starts to trade above the the last low it printed. Starts to trade above that. It starts to form as support above that high. Yeah, interesting. Fails to trade above that high, but forms support above these highs here. See how it forms support perfectly above that higher low, that lower high, sorry. Forms support perfectly above it. Just gives you this 1 minute price action just zooms into the higher time frame one, doesn't it, and just shows you the market structure behind the corrective phases, the pullbacks, and the pushes down. So for me, that the pullback fails. Well, the corrective phase finishes when we fail to trade, get to this high here, fail to trade above it, form support, continues US bearish candles, closures below these minor supports. We get that continued push down to test the lows. I'm going to try and see if we can get any trend lines. Just playing around with stuff there, just trying to look for patterns and that's a nice trend line, I think. Break and retest of it. Maybe not. Strong engulfing candle at this low here. There you go. So if you was to take trades up here, you could extend your runners once you get closures below this key level, and then as you can see, price is still failing to trade back above the key level and first TP point, so your runners would be still valid. We are getting a wedge formation. Let's see how this plays out. Fake out the lows, double bottom, strong engulfing bullish candle. Yeah, expect it to test the key level. Whoa, dog shit price action. Disgusting. Eventually does get there. But yeah, that's minging. I'm going to be trading that. And then I guess that your runners would be inactive here. Start forming support above key level. Yeah, not quite. Look at that on higher time frames. Dog shit, innit? think that's why it's important to take trades at the key levels and watch price action, lower time frame price action at the key levels, because you can just really get lost in the sauce looking at this 1 minute price action during low volatile times in between the key levels. But with gold, there's quite a distance between each one, so if there is areas of interest and market structure which you'd like to trade above or below in between the key levels, you can get away without gold because of the price ranges you're trading within. For scalp ideas, you can still catch a decent amount of pips. But yeah, quite slow price action. I like this move here actually. I like this move. We get a close in 4 hour intraday close below this key level. You would expect price to go down and test this 4 hour level there at least, which it more than does. And then that 4 hour candle at 10 o'clock gives you that top wick and a failure to hold above the key level 1772500. So let's have a look on the lower time frames. Price action around there. Right. So you get that nice 4 hour close below. Start of the 10 o'clock candle here. Even that's a nice trade, really. You still get a decent amount of pips off that. So you get the 10 hour, this is the 10 a.m. candle. Closes here. Gives you that top wick. Perfect rejection at the key level. Double top scenario. Quite small candles on it. Not the best price action. Quite small, really. And then you could have a tight stop loss, really, if price was to engulf this bearish candle, and price was to engulf this bearish candle, and then you'd know that the trade idea is not valid yet. The price action's not ready, so you could have a tight stop loss, not risk much, and you could ride the sells down to this lower. Yeah, then it eventually comes back. The volume's just not strong enough between 10 and 11 o'clock, so we do get a deeper pullback eventually. Pre 12 o'clock, pre New York, and then we get New York open, top wick being formed on the hourly, and then you get a strong, So envision this is the new hourly candle, 1 o'clock, New York open, push up, and then a strong rejection, strong bearish candles. I like how strong this candle is there. So you can have a nice sell by it. You've got a 10 o'clock candle close, 10 o'clock candle close below the key level, strong engulfing, strong bearish price action on the 4 hour. You would envision that you've got further downside to come, so you've got a sell bias. Then you get your 10 o'clock. You could get an early entry if you wanted to, but not the best trading times. 11 o'clock, you could get the first pullback entry to the key level, but like I said, the volume wasn't there to give it that continued push down, and then we get a deeper retracement. 1 o'clock hourly candle. See how the hourly candle, it would have been bullish. So look at the hourly. So strong 4 hour candle closure, and we get multiple hourly closures below the key level. notice how it does that. It closes below the key level and area of resistance and old support. Failures to close above it and trade above it on the hourly candle, and then we get that deeper pullback on the New York Open, liquidity grab, and then it trades below it again on the 1 minute. But you can also notice that's quite a weak bullish candle as well. So then back to entries again. Probably take it as you break these lows here. Starts above the high. If you was dead aggressive, you could take it after this strong bearish engulfing candle. But bear in mind, probably not too far because you're not trading below the key level. You get closures below the key level, and then you would watch out for sensitive price areas such as this one here. And this one here. Because once you start to break and trade below these higher lows, then you can there can be the confirmations for your downside move playing out and the change in lower time frame structure. So yeah, the first area of interest would be here, and then you get a closure below there, happy days, trade idea is valid, and then you get a closure with a strong bearish candle closure below this low area, which is good. At this point you'd be like, right, okay, as long as this bearish candle isn't engulfed by a bullish one and we don't close above this range, back above this range, we should be good for solid downside on gold, which you do get. Another strong push down, strong bearish candle. Weaker bullish candles. Another strong push down, strong engulfing. Tiny pullbacks, nothing to worry about. Look at the size of these bullish candles in comparison to these bearish ones. Strong push down again. And then probably for me, the best exit point is here. Double bottom scenario. Failures to trade below this low, double bottom, bullish support form, decent sized bullish candle, and that would be the best exit point as well. That would be the best exit point. Perfect. So for me, closing the full trade here. That'll do. Here. Or maybe here. Probably here actually. Safest entry point. Because you can anticipate this is just a pullback. We're still trading below these lows here. Pullback, and then you get this bearish candle here. Like, right, okay, I want us to go and revisit these lows now and trade below it for me to see that continued sell side pressure. But we don't get another early double bottom scenario where we form support above it. Looks like with the bearish momentum starting to weaken. So yeah, probably here. That'd be a nice exit. Just after the close of that bullish candle here. And that would be a 3-to-1 trade. Happy days. 3-to-1 scenario. But quite nice price action, isn't it, when it's trending. That's why you just want to trade with a trend. Trend is your friend, mate. Yeah, that's pretty much it really. I think I'm pretty happy with that breakdown. Let's have a look at news events for next week. Nothing on Monday really. PMI, Euro pairs. Aussie dollar, not interested in that. Level of diffusion index based on survey purchasing managers excluding the manufacturing industry. These are the third business after month. It's a lead indicator of economic health. Businesses react quickly to market conditions and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Right. Survey of about 300 purchasing managers which asked respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supply deliveries and inventories. Right, so that's pretty high impact news for the USD. That will be on Tuesday as well, 3 o'clock. So something to look out for. That could go either way. Obviously, it could give us continued short-term strength on the US dollars, deeper pullbacks on gold, or it could initiate that push down and start of the downside move, give optimism for the US dollar and start breaking out that corrective upside structure and start pushing to the downside again and testing some lows. So that's something to bear in mind. It is quite important news. All ties in with the overall health and the economy, the health of the US economy, and ties into the big decisions they've got to make in terms of, well, I keep saying it, but tapering stimulus and interest rates. It's Tuesday, Wednesday, FOMC meeting minutes. It's a detailed record of FOMC's most recent meetings, providing in-depth insights into the economy and financial conditions that influenced the vote on where to set interest rates. Right, so that's massive news as well. Further talks and speculation on interest rates. So what I'm gathering from that is Monday and Tuesday, we'll get probably slower price action on Monday and maybe Tuesday, depending on the PMI results data, and I think Wednesday we'll get the real move of the week. From Wednesday onwards, really, you don't imagine investors sitting on the sidelines and waiting for on USD pairs to wait and see what data comes out and what speculation is released. So I'm expecting a quiet Monday. Quick look at DXY. So there's that short-term strength on the dollar. We still haven't tested these highs yet. So maybe that's to be expected of next week if we do get some optimism fundamentally. Get that continued push up. For further upside, I'd like to see weekly closures, daily closures above these sensitive price areas, top of the range, and then start trading above these levels here in sensitive price points. $94.600 seems quite a sensitive price point in the past. So yeah, let's see what FOMC and the PMI results bring next week, and that'll be the driving factor to an upside move on the dollar or a downside move revisiting these lows. So it's in terms of trading, just sitting on the sidelines and taking in the data and the news result, and then trading the price action that goes with the fundamental side of it. playing on the strength of the weakness of the dollar, basically. So yeah. In terms of GJ, right. So on GJ, tiny bottom wick been formed on a GJ on the quarterly candle. Severe lack of volume, as you can see on GJ at the minute. Look at the state of that quarterly candle. That is dog shit. Let's have a look at how many pips that is. 700 pips in 3 months, either side of that. From the high to low, 700 pips in comparison to a quarter before, which was 1,300. So near enough half the volume of the previous quarter. Yeah, so hopefully we get some continued upside. No, it's not some continued upside, just some fucking volume. But yeah, does seem like it could be a sign of exhaustion at these highs here. With that small bullish candle, but we still are very bullish. No bearish candle was formed, so overall bullish bias is still intact. We have had a reaction to this monthly level, monthly high, but it's quite a small bearish candle in comparison to this strong bullish upside moves. And this candle does look quite similar to this one here, where we had the bearish pin bar, which was just completely engulfed in the next monthly candle. It was just simply a pullback in this strong uptrend. So yeah, still bullish on GJ. Weekly candle, I like how we formed strong support here after this pullback, strong weekly candle closure, and that weekly candle last week was a shit week to trade GJ, weren't it? Look at the state of that. But weaker bearish candle in comparison to this one, and we are supporting this weekly level here. So yeah, I'm looking for continued upside on GJ. Could be a double top, double bottom scenario as well on the daily time frame. So I'd like to see us start trading above 153,800. Start trading above there and getting intraday 4 hour closures above there, stronger candle body closures above these levels. It'd probably be 154 flat for safest price. Oh, just here as well. That's what I've got marked up. Intraday closes above for buys 153,800. But obviously we've got to pay attention to these sensitive prices, sensitive price area on the 4 hour way to the left. Japanese yen still very bearish. Recently just brought these lows to the left, and we're coming up to pull back and retest this low here. So yeah, still very bearish on JXY. At least what I see the Japanese yen currency index start trading above these highs here, and forming support above them to see some sort of corrective phase on and short-term strength on the Japanese yen. But yeah, very bearish on Japanese yen at the minute. So yeah, bullish bias still very much intact on GJ. Safe sells below 149 for me. surface all below these areas where the last significant move to the upside was printed from these lows here. Right, that's pretty much everything.